Welcome to Short View Trading. This is your morning market hit for Tuesday, 11th of April. It's around 9 a.m. London time. So if you're thinking about trading equity index futures, you want to trade S&P 500 futures or NASDAQ 100 futures or other equity index futures around the world on a 1 to 2 week basis, what should you be thinking about when you decide whether to go long or short? What are the factors you should be looking at? How should you decide your entry level? How should you go about trading this market? That's what we're going to dig into in this video. That's what we want to give you some insights on. So let's dig in. Well, interestingly, the first thing you observe when you look at the equity index futures over the course of recent weeks is that they've slipped into a consolidation range. If you look at the S&P 500 equity index futures, the chart we're putting up in front of you now, really since the beginning of April, it's been range bound with a lower level of about 4,100 that it touched once again yesterday, trading all the way up to around 4,170. So around 1.5%, 2% range that it's been trading in over recent trading sessions. Equally, if you look at the NASDAQ 100, it's a similar situation. As you can see in the chart we're putting up in front of you now, a range-bound index, reasonably tight range over the course of April as the market's consolidated its gains of recent weeks. And of course, with that, if you look at the month-to-date performance of a whole bunch of key US equity indices, as you can see in this chart we're putting up in front of you now, the S&P 500 is almost exactly flat. Other indices are off 1% or up a little bit, but really pretty tight around that plus or minus 1% mark. Similarly, over in Europe, it's a similar sort of situation. Over the course of the month, markets haven't done that much. But what's intriguing about this market is as they've gone sideways, as you've seen the S&P deliver a flat return month to date over the course of April, as that's played out, our risk appetite indices have unwound sell signals. So as we came into the start of this month, risk appetite gauges, which measure fear and greed, have got to quite greedy levels. These are 1 to 2 week indicators to give you and help give some insights into that short 1 to 2 week swing trade environment. So having got to sell earlier this month, a bunch of trading sessions ago, those signals have unwound and are pretty much back on buy, as you can see in the chart we're putting up in front of you now. And indeed, that's really pretty impressive price action as risk appetite goes from greedy to fearful. And by the way, these draw upon asset prices across the globe. So this is a global perspective on risk appetite. It's gone from greedy short-term to almost fearful short-term. The equity market in the States has managed to deliver a sideways return and has consolidated its gains in a range-bound pattern. That is a bullish piece of price action as we look forward as we start thinking about how to trade this market on the next 1 to 2 weeks. And then when you add in on top of that, the medium-term signals, so the ones we've just shown you are short-term 1 to 2 week timeframes. If we look at medium-term models thinking about 1 to 2 months or even a bit longer, they all started generating buy signals in mid to late March, and they all remained there or thereabouts. Take a look at this chart in front of you now. This is digging into the detail of the equity market, looking at the single stocks and looking at the percentage of them that are either overbought or oversold. And when a high percentage are oversold, as they have been in recent weeks, it gives you a nice buy signal that tends to signal that a turn is coming on that 1 to 2 month time frame. So we have the short-term 1 to 2 week models lining up with the message of the medium-term ones, and that's quite a powerful signal overall when you're thinking about swing trading on that 1 to 2 week time frame. So to see how we do this and how we play it in detail, entry levels into trades, updates on the models each and every day, an update on our thinking each and every day, please do take a trial to the Daily Rag, also known as the Rag Trader. Simply click on the link below, put in your name and email address, no credit card details required, and we'll send you a free trial of the Daily Rag for a bunch of trading sessions. Or if you're a subscriber, you should have it in your email inbox. So what are we watching over the course of this week? Well, there's a bunch of central bankers speaking, lots going on there, including the Bank of England's Bailey giving a speech later on this week, a bunch of ECB speakers as well. On top of that, we've got the Fed minutes from the March meeting. Over and above that, there's a bit of a focus on inflation. We've had Chinese inflation out already this week. We've got US inflation coming out later this week, both CPI and PPI. That'll be closely watched. That's of course critical, how inflation's evolving from here. And there's other bits and pieces of macro data as well out later this week, including Michigan sentiment from the US. And elsewhere, of course, critically, thirdly, most importantly, we've got the start of earnings season in earnest at the back end of this week on Friday with the major banks, including JP Morgan and Citi and Wells, amongst others. That'll all be watched very closely as we get into the earnings season for the first quarter on Friday into next week and so on. So that's it from us. That's your morning market hit for Tuesday, 11th of April. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and do like and share on social media, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.